Good morning from our global headquarters in New York. I'm Manish Krenny. Welcome to Bloomberg Brief. Let's set that agenda. President-elect Trump rounds out his trade and economic bench. USTR to Jameson Greer, the trade hawk, and Kevin Hassett at NEC. A 60-day ceasefire between Israel and Hezbollah has begun. A first step towards a permanent peace in the region. And a message from the Fed: caution, destination unknown. We're counting down to the latest PCE. Good morning to you and happy Thanksgiving Eve to you if you're celebrating. We're just slightly on the back foot this morning. We had travel higher for 7 days in a row, 52 records on these equities. Still, the Russell manages to eke out a rise of 0.4%. We now know a little bit more about the complexion of the rest of the economic bench. It is Greer at USTR, a known hawk, and Hassett at the NEC, who will guide the tax policy. Bank of America still say there's juice in this tank, 11% left on the upside, 666. 6 on the S&P 500, and get ready for a cyclical inferno. We're waiting for PCE and the jobless claims today on the data slate. Roll it over, have a look at the bond market. They turned up for the fives yesterday. The bid to cover ratio was strong, 2.43 relative to the average. You're seeing yields drop this morning despite those hawkish nominations at USTR and at the NEC. Again, it's the cautionary note from the Fed. Minutes go gradually, and indeed, where is the destination? Then you listen to Mary Daly talking about the labour market being balanced but doesn't want a weakening. Again, driving the narrative maybe that you will see a further cut in December. We'll talk about that a little bit later through the show. Kallum Pickering is my guest this morning at Peel Hunt, and he writes this: the world needs America more than America needs the world. And Trump knows it. The U.S. economy remains unparalleled in richness, dynamism, and self-dependence. Even if trade wars hurt America, Trump bets that the pain will be worse for other countries relative to America. He is, of course, the chief economist at Peel Hunt. We've had 24 hours, Kallum. Good morning. 24 hours to reflect. We now know a little bit more of a hawkish complexion to the economic bench. Are these markets in willful disbelief and just underestimating the reality of what is to come?
It's a good question. Clearly, for now, the market is telling you America is the only game in town. There's a history to back that. Over the past 15 years, persistent growth outperformance, higher quality because of tech, huge insurance policy coming from fiscal, and as I mentioned in the note, the US is the most self-dependent economy in the world. And so when we worry about trade wars, when we worry about potential downside risks for markets, you probably want to be in those highly liquid, relatively safe US trades. But when I look at the policy mix that Trump proposes, I've said it before, I'll say it again, it contains on balance a series of anti-growth policies, immigration curbs, tariffs, those are supply shocks to America, tax cuts, that's a demand stimulus. I think this is a high-risk strategy. He may get away with it, he may not, and that's the big question for next year.
Well, we know that he likes a high-wire act. In nominating Hassett and Greer, obviously at USTR, Greer wants to relegate China to the domain of Cuba, North Korea, Russia, and Belarus. He really wants to make it an economic pariah.
I think the way to think about US policy is there are a set of objectives that Trump wants to achieve. One, clearly, as you mentioned, is China containment. The second is probably to get Europe to increase military spending. And then there's a host of other issues. So the question is, can we work through some of these potential problems and skirmishes through next year? When I look at the US-European relationship, I think there's potential for deals if, say, Germany, France, the EU more broadly were to commit to higher military spending. I think actually it could take the heat out of a tit-for-tat trade war between the US and Europe. With China, I think it's different. You mentioned the hawk in the nomination. If the strategy is China containment, it's possible that we're staring at 4 years of continued escalation, which will be bad news in the first instance, but what I just remind you is we're trying to now deal with 1,000 problems on one day. In reality, the market will be processing one problem for 1,000 days, and markets and economies have got a nice way of adjusting. And so I think the question will be, how do supply chains reroute if indeed the US escalates as badly as we might fear?
Well, Deutsche Bank have run some of the numbers this morning, Kallum. If you level 25% of tariffs, you're looking at a PCE push of somewhere up between 2.6 and 3.7%. That's the inflation side, and then you have the knockback on the growth, which, if I'm not wrong, is a combination that's called stagflation.
Yep. Well, I think that's a downside risk. I wouldn't say it was base case. My base case would be a bit more inflation and a bit less growth. Keep in mind, as markets anticipate tariffs, currencies are weakening versus the dollar. That's really important. If the dollar strengthens as the Trump administration introduces import tariffs, there's a bit of an offset. Similarly, on the other side, as, say, sterling or the euro or the yen weakens against the dollar, as markets fear trade tariffs, that provides a bit of a cushion. But my view is US consumers are going to pay for these tariffs one way or the other at some point. It's either going to be immediate on inflation. I think Trump expects through deregulation and tax cuts he can offset that. Well, then in that case, persistently higher deficits just mean higher taxes, potentially a medium-term inflation risk, and higher interest rates. So immediately or at some point in the future, this costs the US economy. It's a bad policy. But again, I stress, I don't think it's really a narrow trade objective that Trump is going for. It seems to be, let's use trade as a tool to bring other partners to the table to negotiate on a host of issues.
And that is the balance that we have yet to really calibrate, which is how much of this is saber rattling and tactics relative to actually delivery of 25% tariff on your friends, as opposed to what you might do with your enemies. We are waiting for PCE today, core PCE 2.8% versus 2.7%. There seems to be a growing abundance of caution from the Fed, and yet then I listen to Daly and I listen to Kashkari, and I get the sense that this narrative is almost, we've slightly lost control of this yield curve post the jumbo cut, and we have very little option but to continue to cut.
Well, I think that we again come back to this somewhat frustrating conversation about where the neutral interest rate in the US economy, and the reality is the Fed's not quite sure, but it's convinced that probably monetary policy is tight to an uncertain degree. If I'm at the Fed, I'm looking at an economy and I say, well, I thought monetary policy was tight, and yet growth continues to surprise to the upside at modest rates of inflation, which means probably my assessment of potential growth in the US is a little bit low, which implies actually assessments of the neutral rate will also be low. My hunch is, and I've said it before, 2% US growth plus 2% inflation gives us a 4% funds rate. That's the best guess for policy. So I think the Fed can keep moving. I suspect they'll cut in December, although I think there's a risk that they hold. And then let's see what happens into next year. I think if the bond market were to start to worry about US tariffs becoming inflationary quickly, I think that might actually steer the Fed away from cuts next year. But I think if the bond market remains relaxed, I think that keeps the door open for the Fed to keep cutting into next year. So in other words, the market will be telling the Fed how much it should worry about inflation risk coming from tariffs.
Well, I think the best line that I've heard in the past 10 days is from Marco Pampich, where he says, Trump is a human steepener. The question is Scott Bessent, the flattener that you want to buy. Kallum, thank you very much. Great roundup there. Kallum Pickering of Peel Hunt. Other stories trending on your Bloomberg terminal this morning. This is what we've got for you. We've got a leaked email from BYD showing that the China EV maker demanding 10% price cuts from unnamed supplier. That's from January. Signals of preparation for an intensified price war in China's auto market. BYD continues to deliver record revenue and income. Global smartphone sales rebounded strongly in 2024 after 2 successive years of decline. But Apple only edged up 0.4%. Higher as rivals gain more ground in China. The IDC says much of the smartphone growth came from pent-up demand and regions with lower smartphone penetration. Dell and HP have reported results that signaled a stall in the recovery of the PC market. Both companies' personal computer and business revenue missed analyst estimates, with Dell's declining 1%, HP's rising only 2%. Now, the market had seen a historic decline in recent years after a burst of demand for new laptops in the early months of the pandemic. Coming up on the show, A deal is reached. A ceasefire between Israel and Hezbollah has begun. More on that. That's next. And regional banks, well, they've got room to rally. That is the view from Jay Woods of Freedom Capital. He joins me a little bit later, right here on Bloomberg. It is Bloomberg Brief. I'm Manish Craney here in New York. President-elect Donald Trump's trade team is taking shape. Kevin Hassett is set to direct the National Economic Council, and Jamieson Greer is tipped to be the U.S. trade representative. The announcements come a day after the U.S. president-elect vowed to impose additional tariffs. For more on the picks, let's get to Kevin Whitelaw. He's in Washington. I'm just looking at some of the background on this. I mean, Hassett at the National Economic Council, look, we know that he's advised various people in the past, Mitt Romney, John McCain, but he talks about trade wars as being like a battle against scurvy. So these are pretty punchy hawks that he's appointed. Let's kick off with Hassett.
Yeah, I mean, look, Hassett's a guy who was in the first Trump administration in various economic roles, and he was always there to basically portray Trump's economy in the rosiest possible light. So if that meant discarding and ignoring a lot of the government statistics, then fine. He did that, and he found his own statistics and his own data to try to assemble to make the case that the economy was going great, and it's all thanks to President Trump. So he's very much a loyalist. He's very much someone who's going to toe Trump's line and encourage him to essentially do what he's already obviously inclined to do, which is use tariffs as a cudgel, either as actually a penalty aimed at countries or as a negotiating tactic.
Well, it's interesting because then you look at Jamieson Greer, and this is somebody that wants to redefine the relationship with China. This is what he said a little bit earlier in the year at the U.S. Economic and Security Review. There's no silver bullet, and in some cases, effort to pursue strategic decoupling from China will cause short-term pain, and the cost of doing nothing or underestimating the threat posed by China is far greater. So I think this sort of sets the tenor and the tone. Of course, a protege of Lighthizer, and we've yet to understand where Lighthizer and maybe Navarro fit into this picture of advisory.
No, that's right. And Greer is a very much a hawk on these things. He's talked about investment controls. He's talked about export controls. He's talked about sanctions. He's talked about taking away the preferred trade status for China. He's talking about basically a broader confrontation that he did admit would cause some economic pain. I think it's not really clear how much of a free hand he's fully going to have.
Yeah.
At one point, Trump had said that the Commerce Secretary pick, Howard Lutnick, is going to have supervision over the USTR office. That would be new and different. So we don't really know where this is going, but it does mean that at the table are going to be some strong voices that are really aiming to pursue a very confrontational, aggressive approach that would really be aimed at redefining the U.S. trade relationship with China.
Look, it's interesting when I look at the market reaction. It was more virulent yesterday on Donald Trump's language rather than the appointments today. The reverberations were to get the Canadian Prime Minister on the telephone, but the Mexican president, well, she came out fighting. One tariff will come in response with another. So it's very different responses from these countries at this juncture.
No, that's right, and I think that the Canadian one showed something that I think you're going to see a lot of countries engage in, which is the idea that there's a conversation and a negotiation and something to be finessed here. But obviously, from the Mexican side, I think that they're trying to project a different idea of strength and confidence, and trying to say that they have some levers to pull here, and that this can be a sort of a two-way street as it goes. And so I do think that the rest of the world watching with a little bit of nervousness, understanding that this is going to be a go-to tactic, a go-to weapon. And I think everyone's now trying to figure out how literally Trump means these various threats, or how much of this really is just the start of a conversation rather than the end of one.
Well, if history's anything to go by, it seems that President-elect Trump seems to like that sort of strong, formidable, combative stance. He almost has a little bit more respect for that than perhaps the other. Let's see how it turns out. Kevin, thank you very much. Kevin Whitelaw on the trade appointments. A ceasefire between Israel and Hezbollah has started after a deal for a 60-day truce. President Biden and Prime Minister Netanyahu spoke about the agreement following weeks of discussions.
This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again. Over the next 60 days, the Lebanese army and state security forces will deploy and take control of their own territory once again.
I am determined to do whatever it takes to prevent Iran from obtaining nuclear weapons. I have said many times that a good agreement is an agreement that is enforced, and we will enforce it.
Jumana Busachi joins me now. Jumana, you look at this deal, I need to understand how difficult it's going to be to implement these withdrawals and these phases. And I know that you've been talking about what's on the table now relative to what was on the table in 2006 and some UN resolutions that were never really implemented since then. So what is the difference between then and now that we should take heart from?
I think that is the number one question, Manis. And you yourself, having been in the region for such a long time, are very familiar with those dynamics. And it's interesting in the context of what President Biden was saying, and that he hopes that this is going to be a template for lasting calm in the region. But that is the hope. And it is worth also reminding everybody that this is a temporary truce, a temporary ceasefire, 60 days long, and it will come down to implementation. And key to the truce are certain components. One is the gradual withdrawal of Israeli troops from the southern part of Lebanon, in addition to Hezbollah themselves retreating 30 kilometers away from the border and not maintaining a military presence in that part of the country. The Lebanese armed forces, which, by the way, are operating in a very diminished capacity, will be there alongside UNIFIL peacekeeping troops to maintain stability. And the view is that there will be some international monitoring oversight as well to go along with it. But to go back to what the Israeli Prime Minister said, if there are any breaches of the agreement, Israel reserved the right to respond. So crucial point here in terms of implementation. The other question people are asking is what this means for the possibility of a broader ceasefire in the region. Interesting to note that this morning we have actually heard from Hamas and some comments coming through just in the last hour saying that they are following the developments in the region very closely, and they too would be willing to engage in ceasefire discussions once more. This after several attempts from mediators in the region, the likes of Egypt and Qatar, alongside the U.S., trying to push forward with negotiations on the Gaza side and not reaching anywhere. In fact, Qatar were willing to walk away from it just a couple of weeks ago. So the hope is that the ceasefire in Lebanon will open up the door to further ceasefire discussions in the region as well.
And look, Jumana, this raises another question about the relationship between Iran and Hezbollah, and why now? Why has Hezbollah taken this move? What does it say about the bigger framework? And if we should just say, to note that Hamas obviously being designated as a terrorist organization by the US and by the EU. Talk to me about that construct, Jumana, between Iran, because they have a lot to play for with this new incoming administration, the second Trump administration that want to go max pressure.
Well, Manis, I don't think it's a coincidence that this 60-day truce takes you right to the end of January, which, by the way, is a few days after President Trump takes office. So certainly that is one consideration. And it's a question that we've been asking ourselves, why now? Why this timing now? Why are both Israel and the Lebanon front giving the Biden administration a win, so to speak? And we know that the Middle East envoy, Amos Hochstein, has been trying very, very hard the last couple of weeks to get this over the line. Now, you also will remember that about a month ago, we at Bloomberg TV spoke to the Lebanon economy minister, and he insinuated at the time that Hezbollah were ready for a ceasefire. Of course, things got a lot worse since then, but the feeling is that Iran are on the back foot, and there is some war fatigue settling in addition to a new administration coming to the White House in a couple of months. All of those factors contributed.
And I think even Netanyahu said the second reason is to give our forces a breather to replenish stocks as well. So there is a sense of exhaustion as well on multiple fronts. Jumana, thank you very much. Jumana Busachi there on the very latest between Israel and Hezbollah. This is Bloomberg from New York on Thanksgiving Eve. Front pages for you are from around the world on this Thanksgiving Eve. First up, the Financial Times. China is investigating the defense minister for corruption. Admiral Deng Jun is facing an inquiry as part of a broader probe. The Foreign Ministry spokeswoman is calling the investigation shadow chasing. The Journal leads with the IRS enforcement funding could dry up in 2025 by $20 billion of the agency's remaining $22.4 billion is frozen because of a quirk in the congressional funding system. The Biden administration officials are hoping to address the issue before they leave office. And Bloomberg reports that Brookfield is preparing to walk away from a plan to acquire Grifols. Now, the agreement failed to be reached because of a disagreement in the valuation of the Spanish drug maker. Brookfield had lined up financing for the deal and prepared a turnaround plan for the business. Are you ready for your stadium trade? Jay Woods joins me next. What is the Stadium Trade 2025? From our global headquarters here in New York, you're welcome to Bloomberg Brief. I'm Manish Krenny. Let's set your agenda. President-elect Trump rounds out his trade and economic bench. USTR to Jameson Greer, the trade hawk, and Kevin Hassett at NEC. A 60-day ceasefire between Israel and Hezbollah has begun, a first step towards a permanent peace in the region. And a message from the Fed: caution, destination unknown. We're counting down to the latest PCE. Good morning. Equity markets, it's a debate as to whether we're in willful disbelief as to what level of tariffs will be executed. Either way, we're just drifting down by 1/8 to 1% on this Thanksgiving Eve. You can be pretty sure trade will be a little bit light. But we've just broken 7 days in a row of record highs. 52 records so far this year. November up 5.5%. There's still juice in the tank. Don't worry. Bank of America say you still got 11% left on the upside. 66 is where you're going. Get ready for a cyclical inferno. And maybe that cyclicality is reflected in the Russell 2000. Roll it over. Have a look at the bonds. We got $44 billion worth of 7-year paper coming. They queued up for the 5s yesterday, and they took it aplenty. Bid to cover ratio was solid at 2.43 times. So the bond market dips ever so slightly this morning. And as I say, 52 records this year alone. An equity rally that's run for 7 days, and the market capitalization of the United States equity market stands at $62 trillion, more than twice the size of the economy. And this is the ratio that Warren Buffett explicitly warned about back in 2001. If the percentage relationship between the market cap and GDP falls to 70-80%, that's a buying area for stocks. It would work very well. If the ratio approaches 200%, as it did in 1999 and in 2000, you're playing with fire. Let's see whether he's prepared to play with fire. Chief Global Strategist for Freedom Capital Markets, it is Jay Woods. Jay, look, everybody's saying to me this is not 1999, it's not 2000. We're going to have tax cuts coming down, $5 trillion worth of tax adjustments and more next year. Is there any sense in you that we're playing with fire at these levels?
The fire's starting to heat up a little bit, but no, we're not playing with fire at these levels. You say 98, 99, I'll give you 1996, 97, where we're in the midst of a really historical bull run. And to me, this is fantastic. I think the broadening of this rally is what the story is. I liked your little quote to Warren Buffett saying we're getting a little overheated. We're not seeing a rush to IPOs. We're not seeing euphoria into every single stock, every single sector. We're starting to see a few things. Peloton's back, and Carvana made that run. That's epic. Actually, their metrics are a little more explainable. Yeah. But we're seeing a lot of stocks now with the euphoria in crypto, and those related stocks give us that little bubbly feeling. I don't think we're there yet. In fact, when we talk about our next topic, I'll kind of prove that point, because there are some stocks that have not come back and joined the party fully.
Okay, so differentiate for me. I look at the KBW, which is the big blockbuster banks, and that's resplendent, up 44%. Yep. That story, I think, sort of sits on its own. But you're going to teach me about what a stadium trade is. Yeah, I'm talking stadium stocks. And he talked Yankee Stadium before we came in here. No, stadium stocks that are sponsored by regional banks. The regional bank sector, you mentioned the Keefe, Bruyette & Woods Index, the KBX, that has, or it's a BKX is the stock symbol there, that has more of the large banks. The KRE is what I'm focused on right now. The KRE is a wide basket of regional banks, and those banks
you see on the names of stadiums. So if you go down to Philadelphia and you drive by, you'll see Citizens Bank Park, Lincoln Financial Field. The ones that I'm talking about are the Baltimore Ravens Stadium, M&T Bank. That's a stock that has gone full roundabout, broken out, and has a tremendous upside potential.
Yeah. Why so bullish on the regionals? Is it that consolidation, consumer confidence? Is it a 16-month high? Expectations are banging out there, and we're in a rate-cutting cycle. So, I mean, are those the mini pillars of the thesis?
Yeah, well, the fundamentals are there, and then you have the wind at your sails with the Trump trade, if you want to call it that, in the fact that we are in a rate cutting cycle, maybe pause for a little while, but still in a cutting cycle. We have a president and administration that doesn't like this red tape. The regulation is going down. We haven't seen regional bank mergers in a long time. Wouldn't shock me to see that happen over the next 12 to 18 months. And then, mortgage rates have finally stabilized. We get them to come down. You're going to see more refinancing. We're going to see more deals. The IPO market, it's been stagnant at best. I expect that to heat up dramatically over the next 12 months as people test those waters. 52 new highs just this year. That's very bullish, and the regional banks are just starting to come to it. So I look at those PNCs and MNT, Fifth Third. My God, look at this stock. They haven't gotten back to highs. They're just joining the party, and now they have that tailwind to really lift them higher. Up 33% this year, KRE. Yes, I know it's been a great year. But when the regionals go, when the financials go, they tend to go over a secular period of time. So we're talking a 2-3 year run, and we see this once every 15 years. So I think we're in the middle of it, and this is still early innings.
Well, that sort of adds to the Wells Fargo narrative that you're going to have this paradigm shift, and that's in the mega banks, but there's a paradigm shift, as you say, in the stadium trade. Why do you think that they don't cut in December?
Why don't they cut? They don't have to right now. Okay, let's see the PCE later today, as a matter of fact, on this Thanksgiving Eve, as you called it. Right now we've started to see slow upticks, and then unemployment has stabilized. But if we're seeing upticks in inflationary numbers, why are we cutting into that? Let's just take a pause.
But that's because this market has tightened up, Jake. Come on, it's tightened up since they went for a jumbo cut. Their hand is forced.
Well, and that, go back to the jumbo cut. Did we need to do 50 at that time?
Mark Rowan says no, it's the most expensive insurance cut that probably he's ever seen.
Exactly, and they had one official dissenter, by the way, finally, Ms. Bowman. So I think there is enough. Well, we'll get the minutes. We'll get. We had the minutes. Did they come out?
We had the minutes yesterday, and I think that's where if you wrap it up, it's. I would say an abundance of caution. It's very, very split between pause and continuing on. There is that bifurcation.
Yeah, and maybe they'll just wait till the new year. They don't have to. Let's just put it that way.
They don't have the
and
pressure.
We're in that no landing narrative right now, where things have kind of stabilized, and we don't need to push it a little too much. Unemployment is going to be interesting to watch with the new administration, because we have that DOGE, what Department of
Department of Government Efficiency.
They're going to slash a lot of government jobs, and that has been one of the things that has really helped unemployment stabilize. So it's going to be interesting to see if we get that uptick and what that does to this soft landing narrative as well.
What are people on the floor that you work with when you go down there, and the people that you talk to? What are they talking the most about? What do they talk the most about the incoming administration? What are they bulled up about, and what are they most concerned about?
The concern is if these tariffs get out of control, what kind of trade war we'll have with China. If you remember the first month of 2018, the first year of Trump, 2017, slow, steady, 12 months up in a row, 19% gain, no 2% retracement in any day of that first year of his administration. Crazy headlines. Now the tariffs are what derailed that rally for a little while in 2018. Is he coming in guns a-blazing? Is it going to cause a little angst in the market? We know he likes to use it as his scorecard.
But it looks like tax and tax cuts are the front end of this agenda.
And that's the good front end right now, because that's going to be a good tailwind for this market. We saw what his tax plan did the first time. He's going to keep that in place. We don't have to worry about that being repealed. And we'll see where it goes. With the Trump administration, there are a lot of big rhetoric. We'll see what the policy is. Usually he talks big and then kind of comes back to the center. The art of the deal, if you will. It's just...
let's see what Bessent delivers in terms of fiscal discipline.
Well, I think Bessent was a good pick to balance that out. So we'll see.
Jay, thank you very much. Thanks for coming in. Have a great holiday. That is Jay Woods of Freedom Capital with me on the markets. Good morning from New York. It's your Bloomberg Brief. I'm Manus Craney here in New York. President-elect Donald Trump's economic team is taking shape. Kevin Hassett is to direct the National Economic Council. Jameson Greer is tipped to be the U.S. trade representative. The announcements come a day after the U.S. president-elect vowed to impose additional tariffs. Let's get into the picks. Meghan Crane joins me from Washington. Meghan, good morning. Good to see you. A bench of hawks,
morning.
One could say. Hassett, we know, has form. He's been an advisor to what? Mitt Romney, John McCain, George W. Bush. But he sees trade wars a little bit like scurvy. This is quite the hawkish league.
Yeah, it's interesting that the two picks seem to have different opinions about trade wars, not trade wars, but tariffs. Hassett is definitely focused on tax cuts, which are obviously a priority for the incoming president. And he will be a, strong messenger for his his intention to extend the tax cuts and then maybe follow up on the promises he made on the campaign to expand them.
Yeah, it's going to be interesting how hard he pushes with the tax cuts, with the tariffs, with Congress. But perhaps the more brutalist one is Jameson Greer, longtime Lighthizer protege. But this is on China. I mean, he wants generational change with China, doesn't he? He doesn't see a silver bullet, and he sees really the threat from China as being really quite significant.
Yes, he's a longtime China hawk, and certainly will be backing Trump's efforts to use tariffs as an economic saber rattling, or even, whether they impose strict ones or not is unclear. But, he definitely will be advocating for those positions that the president has been espousing for years, really, about on China and obviously on Mexico and Canada, as well as threatened this week.
Yeah, well, I mean, there's what he said at the U.S.-China Economic Security Review a little bit earlier in the year. There's no silver bullet. You need decoupling from China, causing short-term pain. But the cost of doing nothing or underestimating the threat posed by China is far greater. Look, if we look at 24 hours ago, there was a huge reaction in the FX market. One could almost say the equity market had a level of willful disbelief, and it reverberated across borders. The Canadians got on the phone, but talk to me about the Mexican response, because it's punchy, isn't it, to say the least?
Yeah, so Mexico was not sort of as ready to acquiesce, I suppose. They threatened reciprocal tariffs and really highlighted the fact that there are auto manufacturers that have operated in Mexico for decades, GM and Ford, who would really be hurt by that. And, she is not pretending that that they don't have any economic power to reciprocate with.
OK, Meghan, thank you very much. Keeping us up to date with the latest players on the bench. Meghan Crane. Oil steadying on the back of this 60-day ceasefire news that Israel and Hezbollah will begin today. It's following weeks of U.S.-mediated talks. Jumana Basechi is tracking this story. Jumana, just how difficult is this ceasefire going to be to implement? And tell me how constructive this is relative to, let's say, some of the attempts made in many years gone by.
Well, definitely a step in the right direction, but also the terms of the 60-day truce are very reminiscent of a resolution that was passed after the July 2006 war that took place between Israel and Lebanon. This resolution 1701, many of the terms actually mirroring exactly the language that was in that resolution that was never implemented. And here we know that the terms of the truce involve Israeli forces gradually withdrawing away from the southern border in Lebanon, but equally Hezbollah themselves retreating around 30 kilometers away from the border and making sure that they don't have either an armed presence or military presence in that part of the country, to ensure that the Lebanese armed forces, which, by the way, operate in a very diminished capacity, they don't have a lot of resources, will be there alongside a UNIFIL peacekeeping force as well. And then an international monitoring agency, apparently also with U.S. involvement, is going to be set up to ensure implementation. But the key here, as you mentioned, is implementation. And I thought it was interesting yesterday, the Israeli Prime Minister Benjamin Netanyahu, when he was delivering his remarks, said, we reserve the right to attack if Hezbollah break the agreement and try to rearm. So this is still a very tenuous truce. It's 60 days in nature. And yes, France and the U.S. are pitching it as the first step towards a lasting calm in the region, but it remains to be seen whether both sides can hold up the arrangement in the next 60 days. But the other big question, of course, is what this means for more regional discussions around a ceasefire. We just heard from Hamas saying that they are now willing to engage in ceasefire discussions as well. Even the Turkish President Erdogan is saying that he will help to get the ceasefire with Gaza across the line.
Yeah, things may well accelerate from here, and we know that that can happen quickly. The question is, of course, the trifecta between what is it that drove Iran and Hezbollah to come towards this ceasefire relative to Israel. And, of course, at all times, you got to remember Hezbollah is, Hamas, I should say, is designated as a terrorist organization by the US and by the European Union. So it's interesting moves. Jumana can move at speed if it holds. Jumana Basachi in Dubai. Let's pivot here to the United States of America. Americans are packing up for Thanksgiving holiday. I'm here this morning. Danny's away. The TSA is expecting record high passenger volume. Bloomberg's Sid Phillip joins me now. So it looks like, I think the number is 80 million people are going to travel between today and December the 2nd. This is going to be monster for the airlines. Good morning, Sid. How are you?
Morning, Manus. So, yeah, it is a monster for the airline industry. 18.3 million passengers expected to travel this Thanksgiving period, and that's 6% higher than last year. So it's an all-time record, and the TSA is sort of preparing for all sort of eventualities. They're sort of upping their staffing just in order to get people across the line and get them on their flights and get them to their destinations.
I'm just looking here. In the past 24 hours, only 70 flights have been cancelled. That's good news. However, pack your sandwiches. 3,200 flights have been delayed. We're just looking at the airlines board. I mean, how much more protected are we, Sid? I mean, this Biden administration really did put up some new guardrails around protecting us, the traveller.
Yeah, so this Thanksgiving period will actually see the new sort of guardrails and the new rules that the Biden administration put in place, including the rules on automatic refunds for cancelled flights and sort of the fight against junk fees that the government has talked about. And so that will sort of be on test during this holiday travel period. And it remains to be seen what the impact will be and whether or not people will actually get their refunds and whether people will get to their destinations on time and will be able to be compensated if they don't.
OK. Sid, it's a dangerous place to go, to the old airport over Christmas and Thanksgiving. Should just say that Spirit, which is in Chapter 11, 84 airports, they're operational now. You can use all your tickets, your credits, your loyalty points. So you have little faith if you didn't book Spirit. Sid, thank you very much. Sid Phillip on the travel outlook for this Thanksgiving Eve. Coming up, it's a day of data. We've got the PCE, core PCE, the Treasury auction, another one to go. Context matters on Bloomberg. It's Bloomberg Brief. I'm Manish Craney here in New York. A look at what's ahead on the slate today. A host of data coming through this morning. U.S. jobless claims at 8:30 a.m. That will be followed by the core PCE, personal income and spending at 10 a.m. Plus, a $44 billion 7-year Treasury note auction at 11:30 a.m. They turned up for the fives in size yesterday. There was no indigestion. Mike McKee will be hovering across his Bloomberg when the data crosses later this morning. Mike, good morning. Good to see you. The PCE, is it going to be a Thanksgiving gift for the Fed, or what is it going to tell us? I mean, is it going to build the narrative that there's a case to pause?
It may be the overly dry turkey.
Overly dry turkey. Go on.
Well, the PCE is basically going to confirm what we already know, and that is inflation has stalled out above the Fed's 2% target. When you look at CPI, PPI, and now PCE, which economists can generally figure out from the previous two, you can see what the trend is there. It's not what they want it to be. And so the question is, what do they do about that? Or do they do anything? Do they think this is temporary? And for that, they're doing what they call the totality of data. And we have 24 indicators out today. So if you're a trader, this is your cornucopia.
This is your cornucopia. But if you listen to Kashkari, he talked about the trajectory, and he ended his conversation with the trajectory on rents and the new rents that are going to come into the market. And this is part of the rationale for him why they can probably still go ahead with it, or certainly leave the door open fully to cutting in December.
Yeah, no, Kashkari came the closest. Nobody's really said, let's just ignore rents in the CPI and the PCE because the way we calculate them is weird and the rest of the world doesn't do that.
And nobody pays owner equivalent rent.
And you, yeah, exactly. So, but that's become basically sort of what the Fed is doing, is looking through the rent numbers and looking at what inflation is without that, which tells them that things are pretty good. They're going to be looking, there are data today that show kind of where the economy is, the personal spending numbers, the business spending numbers, and then everybody watches initial jobless claims to see if we're starting to see layoffs or not. And right now, nobody really knows, so they're betting it's not happening. What did you learn
from the minutes yesterday? You look at BMO's commentary, and it was like destination unknown. I like that. I like that.
I get that from Ian Lingan.
Yeah, I got that from Ian Lingan, and good attribution to him there. But it is that it's the unknown known of where this terminal rate is, and the question is how do they guide us up, and will that be in the December summary of economic projections, a more serious jolt?
That's going to be an interesting question because at this point we know kind of where inflation is. We'll see where the jobs market comes out next week because we had the September strength, we had the October weakness, and we had the hurricanes and the strikes and things. So where is the job market now? We'll have a better picture of that, and that may give people an idea of what the Fed wants to do in December. But what do they do from there? That's going to be the issue in the summary of economic projections. It's going to be the issue in the dot plot, which they will be releasing both of those. And the problem that you have is January 20th. We get a new administration, and we've already seen things come out on social media that could affect the economy.
Of course.
So how does the Fed guide that? That's going to be the tough thing because they don't know what's going to happen with the economy.
Deutsche Bank have run some numbers in terms of what they think. If you're doing 25% on your friends, which is Canada and Mexico, that would equate to a push in the PCE. Now, they've given a bandwidth, okay, so it's worth caveating this, somewhere to 2.6 to 3.7% if you go to the maximum of that 25% tariffs. That's the kind of risk, the unknown risk that they're dealing with.
And it's really hard to model, and the Fed can't model it either because, and I've used this example before, auto parts, about $40 billion comes into the United States from Canada and Mexico. And yet those things cross the border 6 or 7 times before they get put into a car. So how do you know what's tariffed and how do you add all of that up? Those are the hard things out there that we're going to have to wait and see.
Well, it's solid fighting talk from the president, Sheinbaum in Mexico. One tariff will come in response to another. And so until we put shared companies at risk. Mike, thank you very much. We're counting down to the PCE. We'll take you through it. A couple of stocks just to keep you right before Thanksgiving. Dell extending their decline. Disappointing sales, slower PC market. CrowdStrike, that's also falling. Disappointing earnings outlook for them. And Amgen, well, the results, the weight loss shot, disappointed the street. You can see that's down by 2.69%. The surveillance team will take you through the rest of the markets. Mike will be back tracking the data and breaking that for you from the Bloomberg Brief team. Have a great and enjoyable Thanksgiving. Good morning from New York.